In the fast-paced world of cryptocurrencies and finance, there are numerous developments and trends that demand our attention. The recent surge in Bitcoin's price and the imminent introduction of a Bitcoin spot ETF have ignited discussions and debates that ripple through the financial markets. So, let's dive into this fascinating landscape and explore what these developments might mean for investors like you. First, let's address the fundamental question: why are Bitcoin's recent price movements and the possibility of a Bitcoin spot ETF such critical topics today? The answer lies in the potential transformation of the crypto landscape and the ripple effects it may have on traditional finance. But what exactly is going on here? Why is this so significant? The recent shift in sentiment towards Bitcoin is an intriguing phenomenon. It's rooted in the anticipation of an ETF that could fundamentally alter the investment landscape. With institutional investors and financial giants like BlackRock showing interest, the expectation is that a Bitcoin ETF could usher in a flood of institutional capital, propelling Bitcoin's price to new heights. But what does this mean for investors? The recent price increase in Bitcoin has already sparked a series of questions and considerations. It presents opportunities for profit, no doubt, but it also raises concerns about potential overbought conditions. As the market rushes to buy the rumor, investors need to be prepared to navigate the dynamics of buying the dip that might follow the actual ETF approval. Now, here's where the plot thickens. Why is the 200-day moving average in the S&P 500 such a critical indicator in this scenario? Simply put, it's a pivotal marker that often signals a bearish trend when breached. If the S&P 500, a bellwether for the broader financial markets, begins to show signs of weakness, it could trigger a domino effect across various asset classes, including Bitcoin. But the Bitcoin market is not just about price, it's also about its underlying strength. The rapidly rising hash rate is a testament to the robustness and security of the Bitcoin network. It signifies a growing network, which in turn bolsters investor confidence. Moreover, we need to consider the broader economic context. The decline in total holdings of gold ETFs might be an early indication of a shift in investor preference from traditional assets like gold to digital assets like Bitcoin. This trend could persist, driving more capital into the cryptocurrency market. As we explore these dynamics, it becomes clear that Bitcoin's resilience amid the fall of other assets is not a mere coincidence. It stems from a growing recognition of Bitcoin as a store of value and a hedge against economic turbulence. The different predictions about Bitcoin's price post-ETF approval add another layer of complexity. These forecasts are not just numbers, they are divergent outlooks that can impact your investment strategy. Will you align with the more conservative estimates or bet on the more bullish projections? But it's not just Bitcoin that's making headlines. The anticipation of the Bitcoin spot ETF is mounting. This expectation is fueled by a combination of factors, including institutional interest, regulatory developments, and the belief that such an ETF would grant legitimacy to the crypto market. But what happens if these expectations are met? How will it affect the crypto ecosystem? Let's take a step back from the crypto world and glance at the White House, where discussions about new regulations are underway. These regulations, which could potentially affect not just the AI sector but also Bitcoin mining, have caused a stir in the crypto community. Investors must stay informed about these developments, as regulatory changes can significantly impact the market. And then, there's BlackRock, a financial behemoth, making an application for a Bitcoin spot ETF. This isn't a casual event, it's a statement. BlackRock's involvement signifies confidence in the market, and it can draw other institutional investors into the fold. Now, let's return to the charts and graphs, where Bitcoin's recent trading activity is telling us a story. It's hovering in a specific range, and technical indicators like moving averages and RSI provide us with valuable insights. However, in these charts, what should you be looking for, and how should you interpret these signals? The rapidly rising hash rate, the technical indicators, the sentiment in the crypto market, and the changing landscape of the broader economy all intertwine to create a complex narrative. It's a narrative that forces us to question our investment strategies, our risk tolerance, and our understanding of the financial markets. In conclusion, the world of cryptocurrencies and finance is dynamic and ever-evolving. Bitcoin's recent price movements and the looming possibility of a Bitcoin spot ETF are just two pieces of this intricate puzzle. To navigate this landscape successfully, you must stay informed, adapt your strategies, and be prepared for the unexpected. So, I invite you to share your thoughts and questions below. What are your insights into the current state of the crypto market and the broader economic context? How are you planning to protect your investments and seize opportunities in this rapidly changing landscape? Remember, knowledge is power, and your understanding of the current economic situations will be your shield against potential harm. Stay informed, stay vigilant, and make informed decisions. Disclaimer: the information provided in this speech is for educational and informational purposes only and should not be considered financial advice. Always conduct thorough research and consult with a financial advisor before making investment decisions.
Before you go, help us by smashing that YouTube like button. And subscribe to this channel, so you won't miss any of our videos. This shows YouTube algorithm that you value our information. And it helps us spread the message. Sharing is caring.